Holy guacamole, guys. The stock market was not too pretty today. We had the S&P 500 down 1.3%. The Dow Jones was down 0.4%. The NASDAQ went down almost 3%. And the Russell 2000 went down a little bit over 1% on the day. So we have to talk about it. We're going to break down some technicals today, go over a bunch of stocks to buy. And I also want to share with you guys what I'm holding, what stocks I'm in right now, and in general, where my head is at as a trader and as an investor. So hit the like button, subscribe, make sure to go down below, get into the Discord chat, the Facebook group, get some free money, $10 from M1 Finance and 2 stocks from WeBull. Those are valued up to $1,600. All of those are free. Link down below, and you could check out the Patreon for buy and sell alerts, call outs, morning update videos, and a bunch of exclusive content. Again, that's on Patreon, linked right down below. So let's talk. The markets were not the best today. In fact, that bull trap we called out a couple days ago proved to be pretty valid, and we called it out when it popped up the S&P from 3,800. It saw a massive relief rally. I mean, guys, we're talking a 100-point relief rally here from 37.89, over 100 points, all the way to 39.10. So I called it out, a bull trap. It ended up proving to be right. We failed breaking out of 39.10. It held at a lower high. We hit not yet a lower low, but we're starting to hit that down stretch where we might hit a lower low, and that could be anywhere. Obviously, I mean, the lows from the past couple of days, if those were to test and break, that would be a lower low, hence the downtrend continuing, right? And at this point in time, I mean, it's very obvious that I'm leaning more towards the downtrend continuing compared to us breaking out, because that's what the technicals are showing me, right? You can clearly see it here on the hourly, and if we pull back a bit on the 4-hour, you guys can also see we ended up dumping under the uptrending channel here today on the 4-hour. And yeah, we are holding the 180 SMA as support, this gold line, which pretty much is the only thing here that's keeping the bulls afloat. And I think if that were to break, 37.90, and honestly, if we take out the lows from a couple days ago, if we do hit a lower low, that would be us taking out this 180 SMA support here on the 4-hour. And that's going to be very detrimental for the bulls, because at that point I can see the S&P collapse maybe to 3,700, and I'm saying collapse like it's the end of the world, but in reality it's not. But I could honestly see it go to 3,700, which is about 120 points lower from where we are right now. And get this, I mean, if we got to 3,700, this would still be about a 5% drop, which is literally nothing, guys, right? And one of the biggest mistakes I see, and I actually made a more in-depth video on this on Patreon earlier today, one of the most crazy mistakes I see people make is, especially during a sell-off, going too hard with their cash. And by that I mean, you have 30%, 40% cash waiting for a downturn, and then once the market turns a little bit, you flood everything in, right? That is a mistake. And again, I talked about that earlier on Patreon for those of you all that caught it. And it's just a mistake that I've made before, and now that we're selling off, I'm trying to, not make you guys not make that mistake, because a lot of people learn from their own mistakes, but I'm just trying to make you aware of that, because the worst scenario that you could be in is the market's tanking, which you could look at it as a good thing, but you're in a scenario where if you had cash and you went all in on the little 5% drop, and the market dropped 20% and you didn't have that, cash to go in at a lower price, that is a very bad spot to be in. So yeah, keep that in mind. And overall, the S&P, again, 3,800, if that breaks, I think 3,750, 3,700 flat, I think that is where we're headed. And I'd love to know what you guys think down below in the comments. Let me know. Hit that like button while you're at it. I challenge you all. Let's try and do it. 400 likes. It's been a while since we got 400 likes on a video. So can we make this the first one in a while? It's up to you guys. Hit that like button. And let's quickly talk about stocks I own right now. And I actually didn't pick up anything today. I didn't buy anything today, although I'm still holding on to a bunch of shares here. Let me share with you guys what I'm holding on to quickly. I don't want to bore you all because most of you, if you watch the channel, you know what I'm holding. But for the new viewers out there, I've been picking up Tesla here on the dip. Tesla went down almost 5% today. Didn't add more, but I have been adding. And maybe if we hit a lower low tomorrow, let's say low 600s, that's probably where I'd add more Tesla. You know, SLV is one that I'm still in. This is a silver play. Silver went down as well as the markets, and we saw the stock market and the VIX. Wow, the VIX went up 10%, which is not surprising considering the big drop that we saw today. And SBE, well, it's now ChargePoint, which is CHPT. I'm also still on this one, and I'm looking to average down on this. And typically what you notice with SPACs, once they merge, guys, it's you see a little bit of a sell-off at first. So this is pretty normal in my eyes, and I see it rebounding. I truly do, over 30 bucks soon. And I'm just holding on. I mean, this is a long-term hold for me. Same with NEO, a longer-term swing for me. This went down 4% today. Been adding this one on the dip. And same with Tattooed Chef. So these are a bunch that I'm actively in. And Workhorse, I am still in that one as well, which Kathy Wood, from what I've been seeing, she's been buying this. So she must know something that we don't know. And I'm not going to blindly buy it because of that. In fact, I'm looking to still sell out of my Workhorse. But yeah, I mean, that's interesting to see. After they lost the USPS contract, now they're fighting about it. We'll see what goes down with that. I'm not too sure. But it's interesting that she ended up buying shares after that went down. So yeah, that's what I'm holding, guys. Tesla, SLV, Workhorse, SB, NEO, and Tattooed Chef. So, what are you guys doing? Let me know down below in the comments. I would love to know, as always. And quickly now, let's talk about a bunch of stocks. Many of these are oversold, if I can even talk today, guys. But some of them are not that oversold, but we'll talk about this anyway. So, number one, we're going to look at some tech plays. And you might be like, oh, Stas, tech, tech's been sucking recently. Why are you looking at it? The 10-year bond yield is creeping up. Is the Fed going to step in, suppress that, artificially suppress it, which will push up these growth stocks again, these high growth stocks? And you have a point. I mean, listen, the tech names, the high growth names, they've been getting hit. There's a reason, because this bond yield's been going up. And, what are people going to do? What are people going to do when that risk-free return pretty much goes up a little bit? They're going to rotate out of these stocks that are very speculative. They're high growth. They're going to take some profits there and put it in a bond, the 10-year treasury, whatever, that's yielding 1.4, 1.6, whatever it is. And then once the Fed, because I know it's coming, once the Fed artificially, pushes that rate down, I think a lot of these growth names, we're going to see a cycle back into them, as well as those recovery stocks. And I don't think just because tech is selling off, it's dead. In fact, I'm looking to buy it. I'm looking to buy some individual stocks here. I'm not buying the NASDAQ, for example, or a bunch of stocks, but there are some that are pretty attractive. And Amazon, I mean, it's right on my screen here. This is one of them. This stock is down from 3,500 bucks all the way to 3,000, and it's not that big of a drop. It's only about 15%, but still, a company like Amazon, it's been stagnant for months, right? They had a pretty good earnings report and multiple good earnings reports in a row. I think this stock is, maybe it's not a buy quite yet. Honestly, guys, I'm going to say it. I think it's a pretty good buy right here, 3,000, especially if it goes under 2,800, guys, 2,700. I mean, I would be buying for sure in my M1 account, my own a lot of partial shares of Amazon, and that's the YouTube account. You guys can see I have a playlist on that, so go check that out. And I'd be buying in my other private account where I bought shares recently, and I'm actually underwater heavily on those shares, but I don't care because it's a long-term investment, and I'm looking to hold Amazon for 5-10 years at least. And those shares, I believe, it was a couple weeks ago, it was after they reported earnings, I believe I picked those long-term shares up, no joke, guys, at 3,300, maybe a little bit higher than that. So I'm actually underwater on those, but I don't care because, again, Amazon's one that when it's down 20%, 25%, I'm buying that stock. I am for sure buying it. And now we're down 15%, which is a reason why I'm excited a little bit, but I'm not as excited as if it were, or let's say as excited as I would be if it got to 25% down. And that's kind of why I'm monitoring it here, because if it goes 3,000 and 2,950, 2,900, we start creeping down to 20% down, bear market status, I'm going to be buying a good amount of Amazon there for my long term. And Apple's the same way. I'm treating Apple the same exact way. And if you guys remember, I've mentioned this before on the channel, but I kind of put some price targets on Apple, some downwards price targets to where I'd be buying shares. You know, I'm looking at Apple not as a screaming buy at 120 necessarily. You know, we closed right over 120 today. We went down 2.4%. And I'm not looking at it as a screaming buy there necessarily, although you could nibble some there. I'm not against that. But I think it's a screaming buy as it gets to the low hundreds. I mean, guys, if it breaks 120, it gets to 113, 114, that's a good nibble spot in my opinion. If 113, 114 breaks, we get the 108, the next big support, that's an even better spot. And if it gets to 104, you bet you know what, that is an even better spot. And I remember last time Apple pulled down, it was a couple months ago, it went from 138 to 103. I was loading up. I bought a lot of Apple in my long-term account, retirement account. I bought a lot at 108, 110, 112, and it went to 145. And now it's chilling right around 122. I'm still up on those shares. And I think if it gets to 110, 115, 105, even 100, ultimately in a year, 2 years, even in a couple months, I think Apple could be gunning for those 140s, 145, even higher, 150s. That is where I think Apple is going, especially as the economy reopens. I mean, I think, I think that's going to benefit a lot of companies, obviously, especially Apple, AAPL. So I'm watching Apple. I love it here. Honestly, the lower it gets, the happier I am, right? And Etsy is another one that is admittedly more risky than Apple and Amazon. There's no doubt about it. Etsy is more risky. Ticker symbol ETSY. But I'm looking at it regardless. I mean, you have to have some, some more risk in your life sometimes, guys, right? And Etsy hit 251 recently. That was the high from a couple days ago. It was after earnings. Excuse me, guys. And now we're down a pretty good chunk today, down 12.5%, and we're hovering right around the 180 SMA on the 4-hour. We're hovering right around $205, $210 per share, and this is kind of looking like an ascending triangle a little bit. Resistance at 240, 250 as we're uptrending into it. So let's say we see a relief rally tomorrow in the overall markets. This could lead, a lot of these growth stocks to outperform. That could be a scenario. And who knows? We could see Etsy go 210, 215. Maybe back up 225, 230, right around that area. So I like Etsy on this dip, but the second it breaks the uptrend, which is pretty much this red line right here, the second it gets under that, 200, 180, 190, that's a different story. That's a technical break, and that's not what I'm looking for. But either way, Etsy's solid. Starbucks is another one which I want to see come down a little bit lower, but I like it, generally speaking, above 107, 108. That was a resistance back in the beginning of 2021, back in the beginning of February as well. We actually just broke 108 recently. We got to about $110.50, and now we're hovering a little bit above 106. So I think if Starbucks, SBUX, could get anywhere from 104, 103, right around these moving averages on the 4-hour chart, I view that as a dip buy with potential upside above 108. I think if 108 could break, especially as we're seeing the V-shot, the recovery stocks doing well, don't get it twisted. I think Starbucks is a recovery stock, although it has been doing pretty well. I think this stock is going to do even better when the economy fully opens up. And I think overall, 115 plus is coming. And I mean, I've been calling this. I've been calling this stock, not to toot my own horn, but ever since 70, 75, that's where I was buying Starbucks, still holding it, haven't sold a single share. I'm just, reaping the reward of that dividend, that juicy old dividend. And again, I think this recovery is going to last a while. Well, I don't know how long it's going to last, but I think once the economy recovers, Starbucks has more room to go. And I'm sure you guys would agree. Let me know down below. And one that is a bit risky, not going to lie, and I'm a bit bitter towards this stock because last week or 2 weeks ago, you guys remember on the Patreon, I called out rocket companies, right? I had a buy order. I bought in, put that on Patreon. I bought in at $20.95. I wrote a little excerpt in there. I was like, yeah, Rocket's looking good, being down. It's down about at that point in time. It was down from 26 down to about $20. The short interest was high. I literally put that in my Patreon post, and the short interest at the time was like 31%. And I bought in, I sold out, took a little quick profit last week, and I sold right before the massive short squeeze, which I wrote about in my excerpt, which is why I'm even more angry about that. Let's put it that way, because I had the thesis of the trade planned out. I didn't know there was a short squeeze coming right around the corner, but I was aware of a potential one, right? And the fact that I didn't hold it through, I didn't go with my plan. I sold a little bit early. I took that quick profit. I'm a little bit mad about it, but then again, guys, it's part of the game. It's all part of the game. And you see what happens after short squeezes for the most part. It collapses, right? So if I was in it at $20 roughly, right, I could have doubled my money, and I could have lost, or not lost money, but if I didn't sell at the top, I'd still be up, but I would have lost that entire gain. So with the short squeezes, you have to really be nimble and get out quick. I mean, that is what you have to do. And of course, you can't time the top. That's pretty much impossible. You could get lucky, but it's not always going to happen. And now that I'm looking at Rocket, it's pulled back from $48 to about, what was it at 48 pre-market today? That is insanity, guys. It was $48 pre-market. Now it's at 28. And the short interest, according to highshortinterest.com, is 35.7% right now. So I wouldn't be surprised if this cooled off a bit, $24, $25, and then saw another short squeeze. So this is one that I'm watching. Although it went down 30% today, I don't think it's dead. Honestly, I don't think it's dead yet. So watch out for Rocket. Beyond Meat's another one. BYMD is the ticker symbol. And this is one that is very beaten down. In fact, it is down 40% from its recent peak at 230. That was actually after they got that deal with Pepsi. The stock went haywire, bananas. It went from 135 to 227. Now it's back to 135. Pretty much right where it was before the Pepsi announcement. And this is kind of where I'm looking to see if Beyond Meat's going to hold. I think if 135 could hold 140, even 145, I see trajectory back into the 150s, 160s on this stock, especially if the markets, figure themselves out, if the markets turn around a bit. When I'm in terms of the overall markets, I think that's going to help Beyond Meat. And let's say 135 breaks, it does have some downside. I think it could end up going 125. I would not be surprised if that were to happen. So watch out for Beyond Meat. I like it. It's beaten down, but it's not out of the woods yet, as most of these stocks are, guys. They're oversold. They're beaten down for the most part. A lot of them are. But they're they're not out of the woods yet, so you have to be careful. And FedEx is another one that I like here. It held up nicely as the markets got crushed, and that's probably because FedEx in general has been crushed. It's already taken a beating. I mean, it's taken a beating way before the market sold off. In fact, FedEx is down almost 15% from its all-time high here, and we're seeing this inverse head and shoulder playing out. And all it needs to do, in my opinion, is break 265, and that is where we're going to see a massive move, probably back up to the 280, 290 level, which is where that right shoulder and the inverse head and shoulder could end up completing, right? So watch out for these stocks, guys. I'm telling you, I mean, if this market sells off, yeah, a lot of these stocks are going to sell off further, right? But if we do see a bounce back in the overall markets, maybe we see a relief rally after today's sell-off, a lot of these stocks are probably going to outperform the market. So, yeah, hope you all enjoyed the video. Hit the like button. Make sure to do that. Let's get 400 likes. I really appreciate you guys for showing the love. It means a lot to me. And make sure to subscribe and also turn on all of those notifications and get yourself 2 stocks from WeBull. Those are 100% free, and they're valued up to $1,600 by simply depositing $100, and those stocks are waiting for you down below. And you could also check out the Patreon if you want to work with me more in depth throughout the day. If you're on Patreon, guys, you can message me throughout the day. We can chat there real time. I do buy and sell alerts, call outs, real time. I do morning videos every single trading day, and I'm also posting little mini videos throughout the day as well on there, little cuts of about 2-3 minutes of me looking at different stocks and how the market's doing in real time. So yeah, I mean, check out that Patreon. I'm putting in a lot of work on there. That's linked right down below. So I'll catch you all later. I'll catch you all in the next video. And by the way, I uploaded a DraftKings video. Didn't really get much love, but if you guys want to check that out, DraftKings video, I made it earlier today. I'll link that down below. It goes more in depth on DraftKings stock. We break down the technicals, the recent earnings reports, their strategic partnerships, so much stuff. Check out that DraftKings video, link down below. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.